Investors have been making a lot of money in the market, and when a lot of people start making a lot of money, people start to question if it's real. Are we in a clown market? Are we entering a clown market? And that's what I want to address as the main subject of today's video. Are we in a clown market? And so what we're going to go ahead and do is I'm going to define to you what a clown market is, okay? Then we'll discuss, are we in a clown market right now? Are we getting there? Those sorts of things in this video, okay? After that, we're going to go through Cheesecake Factory's earnings. They did report after the bell yesterday. I didn't get to cover that because there was a million other things to cover. So we'll discuss that, if I'm happy with those earnings, if I'm going to continue to buy that stock or not, if it's a great opportunity or not. And the third thing we'll speak about is, can NVIDIA pass up Apple and Microsoft to become the biggest market cap company in the world, okay? And I'm going to share the numbers around what they need to do and how fast and how quickly they could get there, okay? So I appreciate y'all being here. As always, all I ask in return is that you smash that like button and you make sure you're subscribed to this channel, folks. I do these videos for you guys each and every day pretty much, so I appreciate y'all always being here. As always, if you're looking to take your game to the next level and join my group of super investors and myself, then check out the pinned comment down there. You can apply to join my private group, get access to all my course curriculums in the Discord chat, okay? Alrighty, guys, so clown market has 5 characteristics, okay? The first one is everyone making money in that market? And I think that's a very important thing. You can't be in a clown market if like half the people are making money, half the people are losing money. It seems like that's the type of market where it's just like, geez, man, it seems like everybody's making money in this market, right? Second thing is, you've got to have mass amounts of retail investors wanting in. We'll discuss that. Third thing is, it's got to seem like every stock is going up. And it's like, oh my gosh, is there anything that's not going up right now, right? We'll discuss that. Fourth thing is, the crappier the stock, the more it outperforms. The lower quality the company is, the more it outperforms the market and other stocks in general, and especially, let's call it, just better companies in general, okay? And the fifth thing you need to have a clown market is it needs to be a market that is focused on revenues over profits, okay? That's a clown market. And if, the 2 best examples of a clown market in recent memory were certainly the tech bubble, which was really 98, 99, and then it started, boom, in 2000. And then 2020, obviously, into the beginning parts of 2021. That was a clown market as well. Okay, so those are the 2 examples really in the past 25 years I could give you of clown markets, right? So let's dive in here. Let's go deep, okay? First thing is everybody making money? Well, it seems like if you're an investor in the market, you should be making a lot of money. I mean, it's almost become customary where I wake up and I feel like I should make like tens of thousands of dollars a day, right? There's a public account here today. It was up $59,872. And really, it seems like for the past 12 to 18 months, it seems like the account just goes higher and higher and higher for basically the last 12 to 18 months, right? And it has a few dips here and there, but ultimately the trend is higher and higher and higher, right? If I look out at, let's say, my private group, there's over 1,000 members in my private group, right? I don't know anybody in there that hasn't made money in the past 12 to 18 months, and their account's not much higher today than it was 12 to 18 months ago. If they exist, then they certainly haven't learned a dang thing from me. I think every single person in my private group is in a much better place with their portfolio now than it was 12 months ago, okay? So definitely, I would say we're in a market where it seems like everybody's making money that's participating in the market right now, okay? So that I'll say, other than maybe the short sellers, maybe they're not making too much, but it seems like just about everybody's making money in this market. So check, we have one of the 5 for a clown market. Next up here, mass amounts of retail investors wanting in. Are we at that stage yet? Well, here's some numbers off my channel, which, by the way, keep in mind, my YouTube channels are not necessarily the best for attracting new investors. Sometimes some new investors find my videos, but a lot of times I attract, a lot of you guys that are watching this video right now, a lot of you guys have been in the market for many years now at this point in time, right? But nonetheless, I think I'm a good gauge for seeing a lot of retail investors trying to get involved in the market. In the past 7 days, the main channel has attracted 472 subscribers. Not too crazy. The reaction channel has attracted 511 new subscribers in the past 7 days. Okay, that's less than 100 subscribers a day, right? And the clips channel has attracted 80 new subscribers in the past 7 days. So to put those numbers into reference, okay, you want to get some shocking data. In 2020, 2021, my main channel was attracting 500 to 2,000 new subscribers every day. Every day, okay? So that shows you the levels of what a real clown market is versus, what we have going on right now when it comes to the retail side, right? The retail appetite is just not there the way it was, right? Now, if you want to take it one step further and say, okay, let's take it beyond you, Jeremy, let's take it bigger than that. Okay, let's take it bigger than that. Let's take it to the biggest. Let's take it to Robinhood. There's no app that attracts more new stock market investors than Robinhood, right? They're the kings. So in terms of Robinhood, in terms of their funded customer growth, it's only up about 2%. Year over year, 2%, 500,000 roughly, and they've added, let's call it 100,000 customers. If we go month versus month there, December versus January. So none of those numbers scream, oh my gosh, like it seems like everybody wants in this market. No, it's just not that sort of market right now. So for that one, we don't have that. We don't have mass amounts of retail investors wanting in this market. If we did, I could tell you my subscriber numbers would be crazy right now. Robinhood's numbers would be crazy right now. It would just be, a lot of people, everybody and their grandma wanting to get in this market. We don't have that right now, okay? Third thing up here is you have to have a situation where it seems like every stock is going up, right? So I just pulled up a bunch of, very famous companies just to illustrate, is this a market where all the stocks are going up? This is just a 1-year chart for these stocks, right? You have a Meta, Elf, Amazon, Chipotle, right? Famous stocks. Elf's the least famous of those bunch, but the other three are certainly very famous stocks. And then, I just pulled up some other super famous stocks, Tesla, Starbucks, Nike, PayPal. PayPal's down 22% in the past year. Nike's down 12% in the past year. Starbucks is down 8% in the past year. Tesla's down about 2 percentage points in the past year, right? And then you got those stocks that are great. So the reality is this is certainly no market where it seems like everything's going up. If we were in a market where everything was going up, Tesla would be up very nicely over the past year. Starbucks would be up huge over the past year. Nike, PayPal, all these great companies would be up tremendously over the past year. So we're not in that sort of market right now. So once again, we do not have a market where it seems like everything's going up. There's some very big, powerful companies that are going up, as in Meta, as in NVIDIA, AMD, and a few others. But the reality is it is certainly no market where it seems like everything going up. You could look at the Russell 2000, for instance. The Russell 2000 is doing what? A whole lot of nothing. Check out the Russell in the past year. Put me to sleep. That's the Russell, right? So it's just not there. Next one up here, the crappier the stock, the more it outperforms. That's when you're in a clown market, right? Well, if we dive in here a bit, what happened to Rivian today, right? Rivian would be put into the crappy stock category, certainly, right? Loses ridiculous sums of money and their business is just not impressive at all. And, the stock was down 25.6% here today, right? Lucid, horrible quality company, could be a company that ends up going bankrupt over time or has to sell for a really low valuation. Same with Rivian, we'll see. That stock was down nearly 17 percentage points here today. This shows you the divergence between quality, profitable beast companies and let's call it low quality lottery ticket stocks, right? And a couple of these, I put a couple of my stocks in there because I own a couple lottery tickets type stocks, right? Low quality. Fubo and the Planet. Those are two perfect examples. It's like, man, if they can get their stuff together, those are 10x opportunities. If they can't, they may be bankruptcy candidates, in a year or a few years from now, right? So if we look at the divergence here, you got an NVIDIA, you got Meta, you got Amazon, you got JP Morgan, 32%, 82%, 184%, 278% in the past year. And you look at low quality lottery ticket stocks, Fubo, Planet, 19% down, 20% down, Rivian's down about 40% in the past year, Neo's down over 42% in the past year, Lucid's down about roughly 70% over the past year. So this would be flipped, I can tell you, if you were in a real clown market. These low-quality companies would be absolutely beasting. They'd be up hundreds of percent, and these quality companies would be massively lagging these companies. That's when you're in a clown market. So once again, we don't have another thing for the clown market, right? We don't have the crappier companies outperforming the good companies, the crappier. And there's a million crappy companies I could have pulled up for you guys. They're all doing crappy. Next one up here, revenue over profits. Now, this is certainly a market that is much more focused on the bottom line than the top line. Even if you look at NVIDIA, the golden child of the market, the top line's cool. But what everybody's actually looking at the stock and what's so compelling about it is the bottom line, right? Look at that net income. The net income was up 769% year over year. The operating income was up 983% year over year, right? If you want to look at, that's generally accepted accounting principles, that's GAAP basis. That's what you want to look at. If you want to take it to non-GAAP, even on a non-GAAP basis, the operating income was up about a double up of what revenue was up. Operating income up 563% versus revenue up 265%, right? Net income up 491%. So it's clear as day. I mean, absolutely clear as day that the market cares much more about profits. The reason Meta's gone up so much is because look at the bottom line. The bottom line last quarter was what? Up 200 and what was it, 3%? Or something ridiculous like that. When it came to net income, when it came to earnings per share, it was up something like 203% or something insane, right? That's what's going on here. It's not just about revenue. It's about the bottom line. It's not just about user numbers. I can tell you if it was just about user numbers, fintech would be going insane, and fintech has still kind of been in a tough place, right? And if you want to take it a step further, margin debt. Margin debt can be another thing to look at, right? Margin debt, we're at about $700 billion as of the latest data they had out there of margin debt outstanding. Keep in mind, the market capitalization of the stock market is massively bigger than where it was in the back half of 2021. It's not even close, okay? Much bigger market capitalization of the entire stock market today than it was at the back half of 2021. But back then, we had over $900 billion of margin debt. So we have well less than $200 billion less in margin debt outstanding with a market capitalization that is substantially bigger for the market in general, right? Which once again shows you that's not really clownish behavior. Clownish behavior would be, if we had margin debt right now at $1 trillion, maybe 1.2 trillion, 1.3 trillion, something like that, then you say, okay, we're getting a little clownish here when it comes to that. So the moral of the story is, and by the way, I took a picture of this because I was watching, some Fast Money in the background while I was preparing this video, and Guy Donnie and Dan Nathan, all these guys still so bearish, still so negative on the market like they've been for a long time now at this point in time, right? And the moral of the story is we're not in a clown market. But the one thing I'll say is we could get there 6 months from now, 12 months from now, if we're not careful. We could get there. How it happens is at first you have a lot of people make a lot of money who are more focused on, good quality companies, buying companies that, have great futures and those sorts of things and are very profitable. And then as time ticks on, people kind of, those stocks start to slow down, let's say the bigger, more quality names. And then what starts to pick up is some of the smaller cap names, some of the riskier plays, some of the more questionable companies. And then all of a sudden, those ones start going beast mode. And the next thing you know, all of a sudden, those ones are going up 50%, 100%, 2x, 3x, 4x, 5x, boom, 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 right? And then you're in a full-blown clown market because then you're in a market where everything seems to be going up, 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 up and away, right? And so, hold on, I think my baby has awoken. So Tom Lee talks about the Russell going up 50% this year. The Russell hasn't even really started to roll yet. Let's say, hypothetically, the Russell goes up 50+%. I can tell you if that happens, there's a decent probability we end up back in a clown market again 6 months or 12 months out. Because after you get this big, huge, big tech boom, right, that starts to slow down. Then you get small caps, if they were to go beast mode like that, and let's say a Fubo goes from $1.90 to $7.90. Let's say an Honest goes from $3.50 to, $11.50, $12.50. Let's say, the Rivians and the Lucids and these really low quality names, the Neos all start moving huge. Then you could end up back in a clown market again, where it's just like everything's going up, the riskier the better, and those sorts of things. And so that's usually toward the tail end of a bull cycle. Do we get there? I don't know. Maybe we get there, maybe we don't get there. We'll just have to see. But I will say we could end up there 6 to 12 months from now. We could. It's a possibility of 6 months from now or 12 months from now in the future, and we're in a full-blown clown market where it's just like seems like everything's going up. And then the NVIDIAs and the Metas by that time start to not do that much. Meanwhile, a lot of the riskier stocks are just going beast mode. And people are saying, why do I need money in a Meta or an NVIDIA or an Apple or a Microsoft or these stocks when these other stocks are also gaining 20, 30, 40, 50% in a week, right? So that's how you get there. And so I don't know if we'll end up there. I don't have a crystal ball to say, we're going to be there 9 months from now. It's a baby, okay? But we could end up there. And so it's just important you understand that it's possible. And the one thing we all have to make sure we do as investors is if we do end up there, we got to make sure we stay focused, stay in great quality companies, keep cash levels healthy and those sorts of things if we go there. And that's a big if we go there. But There's a potential. There's a potential of us going there, okay? But the moral of the story is we're not in a clown market right now. No way, Jose. Not even close to it, okay? Now, next up here, let's talk about cake earnings, and then we'll talk about if NVIDIA can pass up Apple and Microsoft in terms of market capitalization, okay? So, Cheesecake Factory. The stock was up today. It was up a little over 3 percentage points. That's about what I figured. You know, the call was good. The earnings were good. It wasn't anything that really stuck out that was great or bad. Only thing somewhat bad was some weather affected the company negatively. It looked like a little bit in January, which, you know, you're going to have some winter weather like that. That comes to be expected in the restaurant business. As far as there was one less week in this latest numbers versus the previous year. I graded them a B overall for their income statement. There was a lot of things they are bringing down. They brought down food and beverage costs to 23% from 24.7. They brought down labor expense to 35.2 from 35.7. Their operating was up a little bit. General administrative, they brought that down. So there was a lot to like in that cheesecake earnings. It wasn't certainly the best earnings I've seen. There was no NVIDIA or Meta or one of those companies, but I like a lot of the trends that are going here, and it looks like Cheesecake's going to emerge with a very, very profitable business throughout 2024 and beyond, right? Now, it was hilarious timing while I was preparing this. Literally, they started talking about cheesecake on Fast Money there. I was just like, that's ridiculous, so I had to pop a picture. I'm like, what freaking timing is this while I'm preparing this? Now, here's something I was looking at last night that I really liked, okay? So they're guiding for about $3.6 billion of revenue. It sounds like that's a conservative guide based upon, because they got questioned several different times on the conference call by the analysts about that $3.6 billion number, and it sounds like the management teams really go to try to be conservative, so I like that, okay? I really like that. Cheesecake Factory average unit volumes are talking about $12.4 million, which I believe would be a record, which would be good overall. They're talking about net income margin targeting 4.25% at the stated sales level. So, we can call it somewhere around 150 million-ish net income for the company. And this is a market cap that's less than $2 billion, so I'll gladly take that. Something else fascinating I saw here was Flower Child. They're going to open 6 to 7 Flower Childs. So this looks like the company's getting really bullish on the Flower Child concept, right? They're talking about 22 new restaurants this year, right? 3 to 4 Cheesecake Factories, 6 to 7 North Italia, 6 to 7 Flower Childs, and 6 to 7 FRC other restaurants, which is a bunch of other random brands there, right? Like Culinary Dropout and a few others. So the thing I've been noticing with North Italia and Flower Child is it seems like they're opening a lot of these like really close together, like super close together. So I don't know, man. That's just a really exciting opportunity there. They're talking about CapEx of 180 to 200 mil. That sounds about right. Obviously, it's a big dividend payer. They'll continue to be a big dividend payer. And then in terms of their share repurchase program, they're saying at a minimum, they're going to offset dilution from employee stock-based compensation and support EPS. So I like that overall. So this is just a company that executes on a pretty high level over time. And I love that, man. Flower Child here. I thought this was interesting, right? Because a Flower Child only takes up about 3,000 to 4,000 square feet, whereas a Cheesecake Factory takes up about 7,000 to 10,000 square feet, right? So the amount of Flower Childs they could fit over time, let's say this is really a hit, right? Which it's starting to look like Flower Child might end up being a hit. Let's say it is a hit. They could at that size they could fit 500 to 1,000 Flower Childs in North America, which dwarfs the number of Cheesecake Factories, right? Because a Cheesecake Factory needs to do huge volumes. So you need to be in like a big shopping area or something like that for a Cheesecake Factory to make sense. A Flower Child, if I just look at Vegas, I'm like, Vegas, a max of probably 5 to 7 Cheesecake Factories can be supported. And you say the Strip maybe, adds a little bit more or whatever. But really the reality is like 5 to 7. A Flower Child concept, maybe that's a, 10 to 20. Around the valley, right? If I look at a market like Phoenix, could Phoenix have 20 to 40, Flower Childs over time? I think so. I think they could support that, right? So they're going to grow that business substantially. North Italia, you're talking about 20% annual unit growth. Flower Child, 15 to 20% annual unit growth there. So pretty exciting opportunities. And the great thing about cake is I'm just getting at such a low valuation, right? I'm just getting at dirt cheap prices. 11 times this year's expected EPS. As far as next year, under 10? Like, come on, man. For a company like this, with this sort of growth profile plus the cash flow machine that is Cheesecake Factory, it's pretty appetizing, right? And no pun intended. And if I look at other companies, like look at a Wingstop, right? Which Wingstop's a growth company, and as Cheesecake's a growth company, and look at Wingstop's 104 forward P on the stock, 85 for next year, for 2025. If you look at a stock like Chipotle, which I think Chipotle's best growth days are behind it now at this point in time, I think their revenue growth is going to continue to slow massively over the coming years. And if I look at somebody like a Chipotle, I mean, nearly 50 times forward P on the stock for what they're going to report this year, likely, right? And next year, you're talking about 40 times. That's no bueno. So, moral of the story is, I'm happy with Cake. It's just a very good, stable company. I think it's a stock that, if I had to say, is Cheesecake going to outperform the S&P 500 over the next 5 years? I think it will. I think it will substantially outperform the S&P 500. Will Cheesecake Factory outperform Palantir over the next 5 years? I don't know. I don't know about that, But in terms of, if I look at that stock versus like the S&P, which is the way I kind of think in regards to that, yeah, I'm pretty confident, Cheesecake Factory will outperform the S&P 500 over the next 5 years. NVIDIA. So let's talk about NVIDIA. Can it become the biggest market cap in the world? Okay. So here's the deal. The company as of today is trading just under $2 trillion, right? I think the market cap's going to 2.5 quick. I mean, quick. As I told you guys yesterday, every dip will get bought in this. If you watch me on my Twitch live stream, you know what happened on that Twitch live stream, right? I was cussing. I apologize for that. I was cussing and I was saying, this is all BS. When the stock was going down initially, I said, they're going to buy this right up. As soon as I heard the numbers in the guide, I'm like, I kept saying, the BS word, but the full thing. I was in the moment, right? And maybe a few other cuss words here and there. And I was telling you guys, like, this is BS. You watch, they're going to buy this thing right back up. And sure enough, what happened? Boom, 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 boom. And I told you guys, what did I tell you? I said, if the shorts better watch out. If that goes in at 680 into the earnings, they're in trouble. Where did it go in at? Right before the earnings came out, 680. And I told you guys, if this stock's under 800, the shorts are lucky today. It closed, under 800, they're lucky. But it's going to be over 800 very quickly here. $2.5 trillion market cap's like in the bag, and I think that's going to happen quick. I mean, quick here, because so many people are so far off sides in regards to NVIDIA still that there's going to be a pile on here in the short term. I mean, very, very short term. So here's the deal. To get to, let's say, Mr. Softy, which is just over $3 trillion, the company needs to add about 50% of their market cap, right? So we're talking about this stock price will need to go to somewhere around $1,250, we can call it, somewhere around there, between $1,200 and $1,300, right? So could they get there? The answer is absolutely. And they could get there pretty quickly, too, and become the biggest market cap in the world very quickly. Here's kind of my thought process here. I think NVIDIA is likely going to go to 1,000 before even next earnings. Like Gene Munster, I was listening to him earlier, and I was like, dang, even Gene Munster's not bullish enough. Because now people are starting to talk about $1,000 price targets. And Gene Munster's, yeah, maybe in a year or two, something like that. I'm like, dude, like in a month or two. Like, what are you talking about? Like, this baby's going to 1,000 quick, Gene Munster. Like, what are we doing here, man? Outside of some black swan event that totally tanks the whole market or something like that, this baby's going to 1,000 quick, like fast. Okay, so even a guy like that, I'm like, holy smokes, he's even way off sides in regards to the situation. It cracked me up. But here's the deal: likely 1,000 plus before next earnings. If the company comes in again with another big beat for this past quarter, and then another big guide higher, I think 1,250. I think 1,250 is probably back half of 24, right? Which would then put it at the biggest market cap in the world. Unless, of course, Microsoft goes beast mode, and let's say Microsoft keeps going up a bunch, then it'll keep NVIDIA maybe behind it. It's maybe number 2 or number 3 or something like that. But I think there's a decent probability in the back half of this year, even NVIDIA could get up to that like $3 trillion number. When I look at the numbers that are coming out, because keep in mind, the stock's still not even rich in regards to forward Ps on this stock. If you look at what's expected this year and in the following year, I'm like, and keep in mind, NVIDIA's blown all these numbers out of the water quarter after quarter after quarter after quarter. They blow their last quarter out. And then the future quarter, they blow that out as well. So $24.52. I mean, who's to say they're not doing 27 this year? 30. Like you can't put a cap on it right now. And when it's already trading cheap, That's what makes it so compelling. And so to see it as the biggest market cap in the world by the end of the year, I don't think it's a huge stretch. I don't think it's in the bag, but I don't think it's a huge stretch at all, right? Now, here's where things get confusing with NVIDIA, because you have a very short term, let's say 2024, which is extremely exciting. The stock could easily go to the $1,000 to $1,500 range quickly here, right? Which I've been saying for a while. But with that being said, after this year, I think things start getting murky, cloudy, muddy, and a little confusing, okay? So here's kind of like, if you look at what analysts are expecting here, they're expecting 80% revenue growth this year, around $109 billion of revenue, right? As I told you guys, 100's in the bag. It's just a question of how far over do they go there. Then the following year, they got 17% growth, 17% growth, 20% growth, right? The problem with NVIDIA is it doesn't work like that. It's always been a very lumpy business. It'll continue to be a lumpy business. Jensen's trying to make it a little less lumpy, but it's still a lumpy business, okay? Where they have these ridiculous ramp ups in their revenues, and then all of a sudden you start getting a little slowing, and then next thing you know, all of a sudden it's a complete flat line or even a downtrend in their revenues, right? That's NVIDIA's business model. So right now they're obviously still on that massive kind of up cycle. They'll likely enter kind of more of the flatlining, I would say probably at some point next year in 2025. Maybe it's the back half of 2025, something like that. And that's, once again, another reason why I've been telling you guys for the past year, I would not bet against this stock. Heck no, 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 no. So it doesn't work like that. And here's the deal, okay? If you look at NVIDIA over time, right? This looks at pretty much the past 20 years here. It has these like big bull cycles that usually last about 3 to 5 years on average, and there's a big downward move after that, right? So for instance, here, 05, 06, 07, massive bull run for NVIDIA. You know, they're increasing their business dramatically. 55% increase in the stock price that year, 102% the next year, 37%. And then what happened in 08? The stock price got absolutely leveled. It was down 76%. That's not even the peak to trough number. The peak to trough number in NVIDIA was over 80%. That's just where it finished that particular year, down 76%, right? Then a massive comeback year in 09, 131%, and then 17% down, 10% down, 11% down, right? Then a massive bull cycle, next big boom for NVIDIA overall, right? Huge growth in the company, 33%, 27%, 67%, 226% the stock price went up in 2016. And then it was coming off of 3 great years for the stock price. And then 226%. And then it followed that up with an 81% stock price move. And then it followed it up with a crash in 2018. The stock went down over 30%. But peak to trough, I believe at the lows, it was down over 50% from what I remember. Then 2019, great year, about 77% up. 2020, great year, 122% up. 2021, great year, 125% up. And then a massive crash in 2022, right, where the stock went down over 50%. And keep in mind, NVIDIA peak to trough was down about 70%. From where it peaked in 2021 versus the lows in 2022 was down about 70%. But the finish out was 50% downside, right? Then 2023, obviously we know what that year was, 239% gain. This year will probably be, if I had to throw a guess out there, somewhere between 90% and 150% gain this year. So it would be another huge year likely for the stock outside of some sort of black swan event that takes the whole market down. And, 2025, I think, is a wild card for the stock. And then it's going to have another massive down cycle, right? But that's basically the story in regards to NVIDIA. It's a 3 to 5 year beast run it goes on, and then an epic pullback, right? Where it's like, holy smokes, like what happened to NVIDIA? They used to be the growth company, and now they're flatlining, or now their revenues are even going negative. It'll happen to NVIDIA again. It's just, you gotta let some time play out here. Everybody wants to rush it. They were trying to rush it last year. I'm like, dude, this is year 1 of the bull cycle, and this is a 3 to 5 year bull cycle that NVIDIA is on here. You can't say, oh, it's over when it's year 1. Now we're in year 2. Okay, so I wouldn't say we're quite ready for anything on the downside here. Year 3 you can start to talk, and then year 4, okay, then you might be in. But dude, people want to rush these things like it's going to end tomorrow, and it's like, no, it's not. We're still in the up cycle here, okay? Very important to understand that, folks. Appreciate y'all joining me as always. Thanks so much for being here. If you're looking to join myself in my group of super investors, pin comment down there to join us in there. We got over 1,000 folks in my private group, and you get access to all my course curriculums, learn everything I got up here that I've learned in the past 15 years, plus get access to the Discord chat and all that other good stuff. Much love, and have a great day.